Have you been thinking about getting a quick secured loan and wondering if getting one with bad credit was even an option? What if I told you that is possible and you could even get an instant decision? I'm going to tell you how in a minute, but before I get to that, let me quickly run through the details about secured loans. A secured loan is a loan that requires an asset, often a property or home equity, to be listed as collateral. Now, this means if you don't pay back the loan, the lender can force a sale of your property to recover the money. This is known as foreclosure. But don't worry, foreclosure isn't the immediate consequence of missing just one payment. It's a last resort, only used when you continually miss payments or refuse to repay. Now let's talk about the cost of a secured loan, especially if you have bad credit. Imagine you get a secured loan of 30 grand at 4% interest on a 15-year term. It costs you £221 a month to repay. If the interest rate was 5%, it would cost £18 more per month, which might not seem like a lot, right? But over the entire term, that's a whopping £2,916 more. Getting approved for a secured loan with bad credit can be easier than getting approved for an unsecured loan. This is because the loan provider isn't taking as big of a risk when lending to someone with poor credit history, thanks to the asset securing the loan. But remember, there are no guarantees. But what about that instant decision I mentioned earlier? Well, here's where pawnbroker loans come in. A pawnbroker loan is a secured loan where the shop keeps hold of your asset until the loan's repaid. For instance, you might take a necklace worth £1,000 to a pawnbroker to secure a loan of £500. If you fail to repay the loan, then the pawnbroker sells the necklace to recover the money. Pawnbroker loans are usually the only way to get a secured loan instantly, and they're typically available to people with a poor credit rating. If you have bad credit, some lenders might not offer secured loans or might charge higher interest rates. You'll need to shop around for lenders willing to lend to people with bad credit. I can help you out with this in a minute. Secured loans offer some benefits. They allow for larger credit amounts, lower interest rates, and potential approval with bad credit. However, these benefits come with big risks. Your asset is at risk of foreclosure, the approval process can be longer, and there might be more fees compared to unsecured loans. Secured loans could be a lifeline if you have a low credit score. These loans require collateral, reducing the risk for the lender and potentially making it easier for you to get approved. But before you jump in, it's crucial to determine how much you can borrow and what it'll cost, all without hurting your credit score further. Loan companies run affordability checks, which determine if you can manage the loan repayments alongside your existing debts and living expenses. The world of online lending has opened up possibilities for those with bad credit, advertising secured loans that might just help you get approved. Here's the interesting bit. You can even borrow against your house or home equity with bad credit. It might come with higher interest rates, but it is an option. And the cherry on top, regular repayments on your secured loan can improve your credit rating, increasing your chances for future loan approvals. Secured loans typically offer a lump sum payment that's repaid over time through monthly instalments, which include both the principal loan amount and the interest. Some, like a home equity line of credit, or HELOC for short, might even provide credit over a draw period rather than a lump sum. But remember, failing to make repayments could lead to your asset being repossessed and sold to clear the debt. That's a key difference between secured and unsecured loans. With unsecured loans, there's no collateral, so the lender can't simply take your assets to recover any arrears. However, missed repayments can lead to defaults on your credit history, potentially blocking future loan approvals. If you persistently refuse to pay, the lender can even involve the courts, which may eventually result in the repossession and sale of your assets. But here's a silver lining. Timely repayment of any loan can improve your credit rating. It shows that you can effectively manage your finances and debt repayments, thereby increasing your chances of being approved for other loans and credit cards in the future. So, if you don't have a great credit score, don't lose hope. Secured loans are still a possibility and they generally offer better chances of approval compared to unsecured loans. Although secured loan application and approval processes can take time, a pawnbroker loan might just be your ticket to get that instant decision. Remember, every financial decision comes with risks and rewards, so do your homework, consider all of your options and choose the path that suits you best. If you're interested in finding a loan for your circumstances, simply click the link below and fill out the short form. It contains a few questions like whether you're a homeowner and how much you'd like to borrow, and then it'll give you access to quotes from around the UK tailored to your circumstance. It's totally free to do so, and of course it won't affect your credit score. Click the link below, fill out the short form and try it out.